Okay, hello everyone, Futex traders, the wider investor community, whoever listens into this stream every week. Hello to you guys. This is Miltos, one of the traders here at Futex. So what I'm going to be going through is a price ladder analysis video. The price ladder analysis video that we do every week on Tuesdays. So for those of you that want to tune in, obviously the subscribers know we do this at 12 p.m. every day. And we just put this video out onto our YouTube channels as well, if you guys want to stay tuned to that. So what we're going to be covering today, this is the first price ladder analysis stream of the year. We're going to be going through a setup in, the Euro Stocks 50 futures. There was a trader that was actually asking for a Eurostoxx 50 price ladder analysis video in 2015. However, we were having a few technical issues with our replay software. We've got that up and running again, so hopefully we can get some more setups in the Eurostoxx 50. Especially this market's been quite volatile so far in 2016. Hopefully it continues that way. And then after I finish with the price ladder analysis video, I'm just going to make a small little announcement. Been teasing you guys for a little while now, but we'll try and clear some of the air up on that at the end of this video, so do stay tuned in for that. So to get started, now to give you guys a little bit of context of how this market was opening up, we're going to be going through a setup actually that took place on Monday, the 11th of January. So we're looking at the 11th of January 2016, so very recent setup in the market. And just to give you guys a bit of context of how the market was actually shaping up on that week, let me try actually and get this. Let me try and get this up on a chart for you guys. I don't know if you guys can see this here. This is a weekly chart. Just going to make this a little bit bigger so you guys can see. So this is our weekly chart of the Eurostoxx 50. And I wanted to give you guys a little bit of context, obviously, because if we just put that out of the way and not actually look at that, what the important area to really keep an eye on is these 30-40s. We're going to be looking at this market as it trades just below 30-40s. Now, keep in mind the market. So if we just take a look at how this is panned out, and we just toggle that a little bit, not give away too much, but we had the market actually open up quite a little bit lower with a gap on the week, and we were testing up back inside these 30-22s, which was our value area low of last week. And we did go through this in our weekly roadmap. We went through a scenario: if we possibly hold above this area, potentially we might see a move back up. We did mention that these 30-40s are going to be pretty crucial, the weekly VPOC at that area. So let's just we've given a little bit of context on some of the levels we're looking at. Let's just draw that out now. So basically what we had seen was the market, basically this is pretty much our weekly profile. It's a stand last week, and let's just say this continues a little bit higher, but we're just looking at the bottom end of it. We had a VPOC that was coming across here at 30-40s, and then we had our value area low, which extended much higher, obviously, at 30-23s. Actually, it was 22, sorry, 22s, 30-22s. Now we had, in this analysis video, we're actually looking at it after it's broken above and it started building some value. So what had basically happened was the market opened up somewhere down here. It had rallied, held that little area, then popped above those 30, 22s, 23s, and was holding it for quite a while. And now we're going to take a look at what it looks like somewhere in this region in here. So it's ranging between about 23s to about 37s, as you can see, already just set up there. We just open up a little bit of a pen so I can draw on the price ladder. Yeah, so as you guys can see, we're just trading between around the 23s to the 37 handle in that market. So let's just take a look at how this pans out. We're going to we're gonna start up the replay now, and hopefully we can see some price action that we can point out and give you guys a few cues as to how the market's shaping up and how the price action is shaping up in this year so far. So let's just give that a go. So as you can see, we are trading. Let me just open that up. Okay, for some reason I've already got a little bit of the volume from the last time we traded this, but in any case, let's just try not to pay attention too much to that. We've got the total traded volume here on the right hand side, the last of traded volume. Just to go through this for anyone listening in, I do get these questions every week. This is the total traded volume at each price. This is our last traded volume, so you can see 15 lots just got lifted there at the offer at 32s. These are our offers, these are our bids, this is our price column, so the prices go up and down as you can see in here. The offers are stacked here. Everyone that wants to sell has their orders on this side. Everyone that wants to buy has their orders on this side. Just a very, very quick recap for those that are listening in for the first time and never seen a price ladder before. I do get these questions every week. Just wanted to clarify that. So we're slowly inching our way up to these 37s. We've got a nice little offer here, just sat at 35s here. That's just been lifted with only 150 lots. Now notice that, guys, we had 1,300 or whereabouts, 1,300 lots got lifted on 150. Now already this is giving us signs that we were managing to go bid over or bid that price with only 150 lots, even though 1,300 were showing. That's already showing me potentially that someone might actually be willing or wanting to buy this market and is just showing larger size on the offer so that he can get filled on his bids. And potentially people might sell in front of this 1,300 lots so that he can get filled on his bids. So notice how we're starting to try and do a little bit more volume. This upper end, we've traded that one contract up at 37s. Now we've double topped that area and we're slowly coming back down. We've just taken out two prices on 10 lots and 2 lots. So we've come down on low volume. The lifting took place on a little bit higher volume. So we're getting, again, a few signs that potentially we might see a little break of this area. Now remember, let me just clear this up for you guys a little bit. So remember, we had the 30-40s, which is a very key area. Now we're currently holding below that area, but that is our weekly VPOC. And as that's our weekly VPOC, there's probably people looking to sell in front of this area. In fact, there's probably already people that have sold in front of this area. Remember, there's already a bearish sentiment in the market, and there are people that are looking to short this market. Now that the fact that we're holding above this 30.22 level, you know, if you're a well-seasoned market profile trader and you understand the fact that we're now auctioning and holding above this value area low of the previous week, you know there's potential for this now to break higher. The only thing left for the market to do is take out these 30-40s, which is a very key pivot now, and then the bulls can start taking a little bit more control. So from an auction perspective, we know that there's potential for that. So we're just going to watch the price action a little bit closer here as we're starting to come down a little bit, trade back to these 30-30 areas. Okay, now starting to speed up just a little bit this price action. Starting to see a few market participants. The price action is speeding up just a tad more than it was before. There we go. We're seeing a little bit more aggressive lifting here. 800 lot just stepping in at 30.33s. Potential for this to take this through the highs now. Let's see if we can actually get bid through the highs. There's 1,000 lot coming in at 30.35s. And an 800 lot now paying up at 30.37s. We're getting closer to this 30.40, guys. We want to watch the reaction through these 30.40s because if we lift through this area, there's potential for anyone that's short to start stopping out. And that short covering could get quite aggressive. Now, we saw 1,000 lots before at 38s, 39s, and 40s. and now it's slowly evaporating. So anyone that's short is looking at this price action and noticing that those offers are getting pulled very, very easily. That's not a very safe environment for someone that's short. And in fact, as you can see here, we're starting to see a little bit more aggression of people coming to market. So what we're going to try and do is try and get filled just in front of those 30-40s. We're going to try and get to market here. We're not getting filled on anything, but we're going to try and just push these a little bit forward here. See if we can get filled a little bit higher. We're trying to make our way a little bit higher. We're looking for that aggression. We're looking for the market participants to now start realizing that this is no longer a bearish day, that potentially we might actually try to find value higher. And you can see we've just lifted above these 30-40s. We're doing more volume above those 30-40s than we did below it, which is giving me the indication the market is valuing or sees value a little bit higher. So I'm moving these orders a little bit higher to see if I can get filled on them. I've already gotten filled 8 lots. Yes, I've bought into the highs at 30-40s, but I'm aware that there could be potential short sellers that need to cover quite aggressively. So I'm waiting for that price action. We're trading at these 30-47s, just kind of ranging between 30-45 and 30-48. So 46s, trying to go offered. We can't. We just reloaded a little bit at 30-46s. When offered 46s, again reloaded at 46s. So someone's selling into 46s, but we keep getting time and time again. Every time 46s goes offered, we're trying to sell into 46s, and we keep reloading and adding more on the bid, which is showing us that there's some really strong buying here. There we go. We're seeing a little bit of move now. The market's just taken a really big move. If you guys noticed, there was a 5,000 lot that actually popped up just below market. And as the 5,000 lot popped below market, if you guys can look, please rewind the video and take a look at that. As a 5,000 lot that pops in just below market, he's someone that's trying to get out of the market, and effectively he just showed up for a split second. He couldn't get his order, and as the market, as he realizes he can't get his order, he just goes straight to market, and you can see the market actually take a bit of a blip because he's just basically bought or lifted 5,000 contracts at market. We're just going to cover into that. Obviously, we do potentially want to stay long, but after seeing a bit of a blip, we're going to try and just take out our size around this area, around these 30-54s area, because that is basically where we blip to. Now, effectively, if we were going to run this video any longer, which we really aren't, because I really don't have that much time. I like to keep these videos generally quite short, just some small snippets of price action. We'd probably look to actually try and get short somewhere around this area and look for the market. Just been filled there, our last 4 lots. Just be looking for the market to retest the scene of the crime. And effectively what that means is wherever the market blipped from, so we blipped from around 48s, 49s, 50s, in this area we'd be looking for the market, looking for a short around this area here, a stop above these 57s. So if we just draw that out, we'd be looking effectively. This is a trade setup that a lot of traders, a few techs, tend to look at when we see a blip. It means it's probably unauctioned prices, a lot of air, so-called air in the market. So we're looking for potential shorts around these 54s, 55s. You have your stop above these 57s. You don't want to keep such a wide stop on this. It's a very small trade, and you're looking for potential move back down to the scene of the crime. So what we call this scene of the crime. I mean, I'm not really tokening it as a scene of the crime trade, but when we see the blips, you always say, okay, that should go back to the scene of the crime. And the crime was the blip, or the 5,000 lot paying up. So basically, that is effectively what I wanted to go through for you guys. Very, very small snippet, just some really quick price action. We saw a little bit of a breakout, some volume coming into market, someone coming in with 5,000 lots, unable to get his fill, so if we just actually draw that out for you guys, just a continuation from what we saw in here. If this area here was our 37s, we saw the market try and bid back up through here. It took out our 40s, and as we came, this is our 40s. If we just draw that coming across here, and as we came above and bid above these 40s and held these 40s and started reloading above these 40s around 41s, 44s, 45, 46s, especially 46s. We started trading around the 46s. We started reloading. There's a buyer that coming in as the market started moving higher. In this area in here, a 5K lot popped up, could not get his fill, so he moved his order up, smacked that market, and that's when we saw a quick blip up to these 57s. Just some really quick and concise price action. The reason why I want to go through this is because often in the markets that are moving quite quickly, and when there's low liquidity in the market, and someone needs to get in or out of the market with a lot of size, those uh, either big institutions or someone that's just really bad at brokering, he might just come in because he can't get his fill. He just comes in at market and he gets it executed. But you have to watch out for these things. Obviously, if you see the 5K lot, you might want to front run it and trade in front of it. But if he's a little bit away from market and you see the market moving away from him, be aware that he could actually come to market, step in, and take a few prices out. So obviously, if you're short in that setup and you see a 5K lot show up, maybe you should consider just trying to ease up on your position, massaging a little bit your position out, because you might see the blip. Maybe massage a bit out, and then if you see a blip, maybe get back in. But in whatever case, watch that price action, especially when it's a little bit thinner, is more volatile. When the big orders come in, it tends to move the market quite quickly. So that's basically what I wanted to cover. As for what I wanted to mention, a little announcement. We have been talking about this over Twitter for a little bit while. Basically, after very popular demand, I've been doing these videos for almost a year. I'd say probably 8 or 9 months now, these price ladder analysis videos, really just to reach out to the wider investment community and see if there were people that were interested in how we trade here. Obviously, there's a lot of traders out there. I've been speaking to a lot of traders over the last year, and there seems to be so many guys that seem to think that people that trade price action or order flow are just extinct. They no longer exist in the market, and that really, ever since the pits and how the pits have died down because of high frequency trading, you can't trade price action anymore. Well, I really wanted to start doing this just to showcase that we are still here. Prop traders, locals, short-term traders, scalpers, people that trade price action, price action order flow level 2 on the depth of market. We are still here and we are still making money. And effectively, what I've done after really a lot of people have sent quite a few emails. I've gotten a lot of things on Twitter. People asking me to just put together something that consolidates some of the setups that I've come through, some of the setups that we have that we take a look at very in depth here at Futex. So what I've done is put together a price ladder training program, and effectively what it's going to be doing is trying to train traders to trade order flow, but through very concise and structured trading drills. Now, there has been the capability to retrade certain order flow. You have that capability on NinjaTrader, for example, that's been around for a little while. We've made our own proprietary software together with Easy Screen. We've got our own Futex Live replay software. And using that now, we've basically looked back over the last year at least, and we're continuing to build our archive over the next year or so. And what we're going to be doing with that information, all that order flow, we've got tons and tons, gigabytes, if not terabytes, of a database worth of order flow. We can go back and replay any single event, any single order flow pattern. What that means is we can take, for example, an absorption pattern or a flipping pattern or spoofing pattern, a breakout, a fade, any one of these order flow patterns, things that we've identified within Futex, go back and trade them again. Now, why is that useful? Why do we find that useful? How can that help traders develop? The reason it can help traders develop, and the reason why we're using it here at Futex with our graduate traders, and we're going to be using it from now on in the future, is because if you take if you take an athlete, for example, any sort of athlete, you know, Lionel Messi or Cristiano Ronaldo or maybe Roger Federer, Michael Jordan, these guys did not get to where they have gotten without doing very, very specific, deliberate practice, doing drills upon drills so they can build up muscle memory and build an instinct in their field. Now, obviously, you can build that instinct just by trading on a simulator. You can build that instinct just by trading live every day. But let's just say um, a specific breakout pattern only comes once every 2 or 3 months. Well, you're only practicing it once every 2 or 3 months. Maybe you might have recorded your screen, and if you're doing that, that's great. You can go over your order flow pattern and see how you could have traded it differently and watch the order flow. But what if you had the opportunity to go back and trade that event again? And what if I told you you had the opportunity to go back, trade that event again, um, and do it a couple of times over the next month? So let's just say there was a non-farm payrolls figure that was coming out at the end or the beginning of the month, and the 2 or 3 weeks prior, you do two separate drills on trading non-farm payrolls. That's obviously going to train your eye to get used to that type of price action. And when it comes to the day, you're used to trading it. You can actually fit in with the flow a lot quicker. You don't have to wait for a whole month to trade that figure again. You effectively, if you do them enough, instead of trading 12 non-farm payrolls a year, you can trade 24, you can trade 36, you can trade 48 non-farm payrolls a year. You can trade even more if we build our price ladder calendar to that scope and to that scale. So basically what we're doing is we put together a price ladder training program for those of you that are interested in trading on the price ladder. And if you guys are interested, please you can visit price-ladder.com. The site's not fully up yet, but you can put your email in there if you're interested, and we'll send you any news that we have as soon as it's released. It should be released by the end of the month. And yeah, if you guys have any questions at all regarding this video or what I've just spoken about, please get in touch with me. My Twitter handle is at MVS_Futex Live. So great. Thanks a lot, guys, for listening. Hope you guys have a great rest of the trading week. This is Miltos signing off for Futex Live. Bye-bye for now, guys.